Hey there. Have you been hearing about the massive impact that artificial intelligence is supposed to have on society? Well, there's a special kind of AI that's designed to revolutionize specific industries and businesses. It's called vertical intelligence, and the company that we're going to meet today is the expert in this field. What's this company, you ask? It's called NowVertical Group, which is a leading provider of vertical intelligence solutions. They work and service businesses across a wide gamut of specialized industries like banking, retail, automotive, government, media, technology, travel, and entertainment. Their scope is simply incredible. They've accomplished this breadth of industry intelligence through the roll-up of 12 software companies. A staff of over 500 employees with operations on 5 different continents and over 250 customers, generating an estimated annual run rate of more than $70 million. Their clients include some of the biggest names in the game, like Nike, Disney, Netflix, Porsche, GM, U.S. Department of Defense, Adobe, and General Electric, to name just a few. Yet with year-over-year revenues up over 600% and a track record of delivering on their promises, their stock is down over 50% since January. Is this a case of investors not understanding the company? Let's dive in and discover just what the heck NowVertical does. Today we're sitting down with founder, chairman, and CEO Daren Trousdell to fire some fastballs at him and explore the world of vertical intelligence. So buckle up and join us for this exciting interview. Well, hey, welcome everybody to another edition of Talk Stocks podcast. Today we've got Daren Trousdell, CEO for NowVertical, with us today. So without further ado, welcome, Daren.
Thanks, Kara. Appreciate your time being here.
Yes, yeah, awesome. I thought we could sort of jump in a little bit. Maybe you could just start off by telling us a bit about your background, who you are, what you're all about, how you got here.
Yeah, so I'm Daren Trousdell, as we just introed, founder and CEO of NowVertical. My background has been in technology, starting companies, running companies, selling companies in the space. Early days, mostly in digital media. So, all facets of operations, financings, running, customer sales. I've had exposure to kind of all facets of business and industry in technology. So that's kind of how I got to, where I am.
Excellent. And maybe you could tell us a little bit about the history and the mission for NowVertical Group. How did the company come to be?
Yeah, great question. So Now started, just over 2 years ago now. It's still very early in our development. The first acquisition that NowVertical made was a company called Signifier, which was a company I was personally involved in, which was really our first kind of foundational asset, but also a very important asset in the world of data, where we started, where they were really doing advanced data work, data fusion work, which is really helping customers bring their data together in one unified model, which you need to do if you want to do any kind of proper work with your data analytics, et cetera. Now's origin started as that company, opportunistically became for sale. I bought it and saw the opportunity to use that asset as a starting point to buy other assets and create a consolidation strategy vehicle in the big data space, now AI, that can bring together best companies in both the software side and the solutions delivery side to serve customers globally. That was the origin.
Excellent. Well, that probably leads me into my next one. You use some big words, and your website uses a lot of different language. Maybe in some easy to understand terms, what exactly does NowVertical Group do?
In the simplest of simple sense, we help our customers turn their AI ambitions and investments into vertical intelligence. And what that means is we help our customers who want to automate and want to use their data to drive business decisions, business operations, we use our technology, our software, and our expertise in industry to deliver that. And our approach is to do it by industry. So in industry, meaning automotive or government or different industries we serve, there's no one size fits all for AI. There's no chat GPT that's going to work in automotive and work the same way in a different industry. So we have very specific expertise, personnel, technologies that are industry specific, and that's what's unique about us.
What are some of the verticals that you kind of work in today? And I noticed from the website, you've got a couple of fairly well-known, like major, like top companies. How did you get in their door?
Well, our company has been built through 12 foundational acquisitions now. So, we've been buying customer portfolios of customers that transact and do work in this space. So the industries we serve are the adopters of AI and historically big data. And those industries tend to be industrial, so automotive, aerospace, government. Specifically, the U.S. government is probably one of the top consumers of AI today, and really advanced use cases there. But in the other industries too, financial services is a big one for us. Media and entertainment, we have a very important product in that space. Oil and gas, and new industries are emerging for us too: pharma, healthcare, other industries that are definitely adopters of AI, big data technology. So that's what we focus on. We're not in every industry. There are many industries we could be going into in the future as they mature or their needs mature, and that's how we enter new industries.
Excellent. Well, it sounds like you cover quite a gamut already. So that touches on quite a bit of available business. I guess so. You've kind of coined the term, or is it a fairly well-known term, as vertical intelligence? And how does it compare to this buzzword that's sort of going around right now, AI, artificial intelligence?
So AI is general. So AI could be robots, eating the world like everyone's freaked out about right now, or it could be I'm going to build a piece of software using, an engine like ChatGPT to, automate writing my book or a paper. AI is generic and does not work in industry. So we looked at the world as we were evolving from just data experts to AI, and as the world was evolving, and saying the world needs vertical intelligence, which is industry specific application of AI technologies that unlock value for the modern enterprise. And the problem with AI is it doesn't work, obviously, as I've mentioned a few times here, without industry expertise. Most customers or most enterprise customers don't know where all their data assets are. So without the data assets, your AI is not working. It needs models, it needs language models, it needs lots of training, it needs things to operate from. So without knowing that, and also without having it governed and compliant, it's not applicable or usable in the enterprise. So these are areas that we believe are paramount and foundational for our customers to have a solutions provider or a partner to deliver, and that's what we deliver. And we call it vertical intelligence. It's a really important term that we sell and market, and it's a differentiator for us too.
Excellent. And in terms of some of these customers that you have, it sounds like this is sort of ongoing, reoccurring, sort of long-term business rather than kind of a one-time sale. Would I be correct on that?
I think the latest number we talked about it last year publicly, but I think over 80% of our contracts are recurring in nature. Like we and the solutions we bring to industry are very sticky. They're solving very important problems, anything from cars turning off with our automotive customers, where safety is a real problem, to airline routing, to advertising effectiveness. It could be problems that need to be solved in enterprise, and we zone in on that, and we sell against that, and that's kind of a unique differentiator too.
Excellent. And how do you sort of stay ahead of the curve in terms of developing and implementing new sort of vertical intelligence and sort of, I guess, the associated applications?
We stay out of the curve. There's 500, wonderful people in our company, geniuses that are much smarter than me that help us connect to the customer need first. So our first priority is understanding what our customers' problems are, and we'll use any tooling, any person in our company to help solve those. That's really helping us stay ahead of the curve in the market, because you're the closest touch point to the customer is what matters and their problems. Beyond that, we're involved in the industry. We have deep industry partnerships with the largest companies, in the world, whether that be, cloud tech, Google, Snowflake, Click, others, and staying in industry too, like, in a global focus. Our company is a global company where, we have lots of people in the US, Canada, Latin America, UK, Europe. So we're getting different perspectives and we're getting different flavors of how AI and how we are positioning VI to be delivered in those industries.
I think I was reading on your website and in some materials, you've got about 250 customers on 5 continents, and you're working with companies like you mentioned a few, like Nike, Disney, GM, Adobe, the US State Department, which I'm sure is pretty interesting. So were you able to, I guess, acquire those through some of these roll-ups?
Yeah, all of our, outside of net new customers, we've won post-acquisition, which there's a lot. We really are looking, when we're acquiring a business, to acquire a fertile, sustainable customer portfolio that we believe is going to stay for the long term. And that's why we use the words like sticky, but it's also something we can grow. And a lot of our organic growth strategy is expanding share of wallet with our customers. So it's a really important point. And you can, as you pointed out, you see our customers, they're the large, the titans of their industry. So, CPG, Nike, Disney on media, we have Netflix, we have GM, Porsche, other automotive companies, Aeromexico and aerospace. In the US government side, Department of Defense, State Department, Department of Energy, and growing. Very, very important for us that we demonstrate retention, which we have strong retention, and we demonstrate share of wallet expansion over the next few years. That's like our prime organic strategy.
Excellent. And, can you speak to, I guess, your acquisition kind of strategy, how they fit into the company's overall vision and goals? I've also seen mention out there that you're targeting sort of 8 to 10 new acquisitions in 2023. Have you completed on any of those? And are you able to speak at all on some of the targets that you might have?
Yeah, like we're still feeling good about, that number we've put out to market. This year, it's a really important part of our strategy to continue our M&A program, because we're, really on the doorstep of, on the financial side, printing some really impressive financial results. That new M&A, because we're only really focused on accretive M&A at the moment, is going to enhance that even further. So, we are in active process with a variety of targets. Our acquisition pipeline has never been bigger, and we've had a big acquisition pipeline since inception. Our acquisition strategy is pretty simple. It looks at, regional. So we've been very regionally focused. We built a big business in Latin America. We've acquired companies in the US. We've acquired companies in the UK. We have other markets that we really want to go into to complete our kind of global service function. Very important to what we do, because our customers are global. So share of wallet expansion. If we can service Disney in the US, we can probably service Disney in Latin America. We can service Disney in Europe, as an example. We need those capabilities in those regions. So you're going to see regional expansion continue. You're going to see capability expansion added, whether it's expanding our machine learning capabilities, tooling and AI. But, everything we're doing on the M&A front right now is about driving accretive growth. We're looking for profitable, cash flowing assets that map to our current business unit performance. So that's really important. Third is talent capability. There's 500 people. We really want to keep adding the best people into this group, which is going to help the story elevate, to the next level and drive the brand forward. So that's sort of like the 3 pillars of the acquisition strategy. Again, financial is really important right now at our current size. We've been very successful in our acquisition program, regardless of our share price, deploying capital and using our currency at substantial premiums to where it's been in the market and showing the upside to targets. And we're going to continue to do
that. Excellent. In touching on your financial performance and I noticed that you've mentioned a current run rate of around 70 million in annual revenues and are targeting 100 million in short order. Those are some pretty eye-popping numbers. Can you break this down a little bit for us? Are you sort of on track for that and on track for that sort of growth?
Yeah. So on the existing business side, so on a pro forma basis, all the assets we own now, that's pretty much the ballpark what we expect in 23. Which will have some growth from 22, which is exciting, which is our business units are growing, which is important. On the $100 million kind of milestone for us, which is a key milestone, and it's been, again, we've been doing this for 2 years. I would like to see other companies who are moving as fast as us, but 100 million is sort of a threshold of scale that we've really focused in on. So the next set of M&A we've been working on and are racing to get in play will be that additive 30 on a pro forma basis to get us to that 100. So 100, if we can execute on the M&A program as we are, assuming we are as successful as we have been historically, we'll reach that goal on a pro forma basis for this year, and then we'll reset kind of the next level of goals.
Excellent. Well, it sounds a little bit like you're an earlier version of one of my favorite long-term stocks. It's one called Constellation Software. If you pull up a 15-year, almost 20-year chart, it's a thing of beauty. Bottom left to top right, almost like it's drawn with a ruler. Totally textbook, perfect. They're an acquisition machine, completing several acquisitions every quarter, every year. They have done for years. Do you think that you've got the potential to be the next CSU?
I think we have the potential to be one of the Canadian market's best consolidation stories in a very important industry that's much more important of an industry than what Constellation's done historically. Constellation's in a vertical software business where the industry isn't as important as what the team at Constellation has been able to execute. It's pure beautiful execution story. We are a little different in our model. We do have a deeper level of integration in our company. We do have economies of scale we bring together. We do have customers that we want to expand share of wallet. Makes it a little more of an active corporate office. And again, I know enough to be dangerous because I've also been a shareholder for quite a while there, and it is an inspirational story, company, operation, that we really look towards. Our CFO is ex-Constellation. But I know enough to know it's not a apples to apples comparison with us. Performance wise, I believe we will have a similar performance in there. And when we get a market that understands what the potential of AI is, and we're really the only company that's delivering not only the right idea and application, but we're the only company actually delivering real revenue and profits in the space. So once the market understands that, I think we're off to the races in a similar left to right ruler sense.
Well, excellent. I'll sort of take that long answer as basically saying yes. But hey, just sort of on that sort of note in terms of perfect sort of charts. Notice that your stock was doing really well, sort of December, January, trading sort of in the 70s and 80 cent sort of range. But then in February was met with a bit of sort of resistance. Stocks dropped a bit. It seemed to me that it stemmed from maybe a financing that was done. Are you able to sort of walk us through any of that? What do you think, and how's the company Is there anything remain unchanged other than you guys having a bit more capital now? Is there anything that's materially different about the business that would cause that drop?
Yeah, nothing material, because we haven't posted financials since our Q3 posting, and now we have Q4 coming up and Q1, and that's Q1 is a very important financial reporting timeframe for us in the story, because it will showcase the majority of all our assets working in unison. We did a financing, and we had a strategy for the financing, which was, how do we attract some institutional support in the story? And because it's been a really strong retail story for the most part for the just under 2 years we've been public, and we've had a lot of retail support, which has been great. But for us to really move the needle and get this forward, it has to get institutional support. So we had an opportunity. We were brought an interesting deal, and I think it like a lot of financings and a lot of sentiment around financings, which kind of is an interesting one that I don't agree with, because companies that are early stage, that are building like we are, here and there require financings. You can read financial statements, although we're now coming out of that need basis, where we can look at financings on a future basis in an opportunistic way. It's really, that's why the junior exchange exists. It's really shocking to me that people look at dilution like that as such a negative thing. And anyway, I think word gets out, and people short into it thinking they can get allocations. We filled the round, so there was no allocation, and a couple mistakes were made on the on the side of the maybe the banks, which didn't halt the stock at the right time, whatever the case may be. But what matters is a couple things coming out of it in hindsight. Number one, every financing we've done, we've hit our number every time, and that's because we present to investors how we are allocating our capital and where it goes and how we turn that into a result in our company. Second thing, we've had such incredible volume. This story really kind of suffered from limited volume, which is an important thing you need to have if you want to attract a broader shareholder base. So we're getting a few benefits now, and I think the other benefit is for those buying right now. There's been only a couple times in the story's history where it's been at lows, and now you get that opportunity. And if you're looking in the market, you don't need to be an oracle, or you don't need to play speculative games. Looking at now and our past financial performance and what we're projecting, to see why this is the story that matters in the market versus some of these speculative things that rip up for a couple weeks, do promotion, and then they collapse. Like, this is not a story that's going to collapse. It's a story that's may take a longer time to evolve, and I'm talking from a stock price perspective. So for us, if our targets are taking our stock at a premium, if the business is growing, we're able to do acquisitions, which we have been because we have alternative financing methods, we aren't concerned. The story has only gotten better.
Great. So with having a company that's got 500 employees and staff, and you're the CEO running all of that, what does a typical day look like for you?
Well, the typical day starts with working very, very closely with my exec team, who is comprised of a CFO who obviously, like I said, has experience in this model. So running the model, working with our president, Sasha, who is really zeroed in on our commercial, and they have very complementary, important roles together. Sasha's very focused on the top line through GP, making sure our business units are not only performing to their budgets on their own, but also driving the cross sell that I've talked about. That's a very important metric in our group. And Aleem on the CFO side, operations, making sure these businesses are optimized to drive maximum margin opportunity for us, and then leveraging that. The next piece is on the 500 people we have at our corporate office, an HR group dedicated to making sure that collaboration exists, and the knowledge sharing and And the intergroup work is happening because we have part of our plan is to extract the financial value from that. And then, the most important, element of the other half of the growth story on M&A is our in-house legal and corp dev team that I work with every day, finding the targets, working with the targets, getting the targets into LOIs through agreements. And we do a lot of that in-house, and we have since the beginning. So that's what I spend the majority of my time doing. And then capital markets work. I love doing this. I love telling the story. I talk to investors every single day of every week, month, year. And I'm with my megaphone saying, like, how are you not a shareholder of this company?
Well, that's great. I especially enjoy your Twitter. You put out some good stuff, so keep doing it. I think it's a really effective medium for being able to get the word out. And I've found that CEOs that tend to want to communicate externally with investors, they tend to get very loyal sort of shareholders and loyal following. So anyways, keep doing that.
Will do.
Excellent. So at this point, what sort of percentage of the company is sort of owned by insiders like yourself?
Insiders still own, roughly around 40%. So we have very strong insider support and ownership. I'm the largest part of that 40%, but our core management team are all are for the most part owners. We are really pushing the insider ownership idea through the entire company. We've got programs that we're instituting for later on this year around driving incentives to push that up. In terms of insider buying, if we're not in blackouts, we're at these levels, it's somewhat of a dream. So we're hoping that we may be able to get part of the opportunity. I don't think after we post financials it'll be there the same way, but we liked it at $1. We like it at anything. We've been active at a lot of different levels, so we want to keep being active.
Excellent. Well, that sounds like something good for us to watch for. Get some good alignment there with other shareholders and a very significant insider ownership, which is great to see. Another item to tick off on the DD checklist. Is there anything else you'd like to sort of share with us here before we kind of wrap up?
I think my ask is everyone join our upcoming financial releases and our webcasts and our conference calls, and feel free to ask questions. Feel free to reach out to me directly and start a dialogue. We are happy to tell the story to anybody. We believe our story is arguably one of the most important stories in the markets right now that we all can build together. And what we're doing in industry is super important. We're solving very important problems in government through automotive, and we see the end of this rainbow being very significant for all participants at all levels, and that's how we want the company to be portrayed to the market.
Excellent. Well, maybe just before we wrap up, I know you're probably highly restricted in terms of what you can talk about with some of your customers, but maybe just on a high level, what to break it down to a layman sort of perspective, could you give us like an example of what your company would be doing like in the automotive space?
Yeah, sure. One of our biggest customer stories ever was, General Motors, public case study from us, came to us, the first company we acquired, and we've still working with them, which is their ignition switches were turning off in their cars, and they had no idea why. And they couldn't physically diagnose it. They couldn't look through the literature of the part and the parts manufacturers and figure it out. But the answer to these kind of really big problems in any industry, but things like automotive, are definitely in data. So long story short, General Motors had a group of analysts, which they actually called readers at the time. So they were not officially trained analysts, but the readers would look at data kind of coming at them on a daily basis, read it, and not be able to create any commonality. Our Fusion platform we installed at GM ultimately fused together all their data assets, which in this part of their group, which is about 2 billion records, 50 different databases of structured data. So think spreadsheets, relational databases, and unstructured data. So YouTube videos, OnStar audio calls, things like that. When all their data was in one view, the analyst, who became an analyst, could analyze the data, or the system can analyze it for them on an automated basis, and highlight the commonalities of the data to find an issue. In this case, it was 3 unique data points: a video, a spreadsheet, and an audio file, that they were able to determine that the ignition switch was turning off because there was extraneous influence or weight on the barrel of the ignition in the fuselage. It was dislodging it in a minor way.
Wow.
And the data told them the answer. We use that example because it was a catastrophe for GM. It was a $900 million fine,
right?
Deferred criminal prosecution for management. So when I say things like, enterprise customers have big problems, I'm not kidding. These are significant problems that we help solve with our technology and our systems. And it doesn't have to be life and death. It doesn't have to be like this. It can be, how do I make my products better targeted and more available for customers with my shoes or Netflix recommendations. That's what we do.
Well, that's excellent. Well, thank you very much, Daren. I really appreciate you spending some time with us and getting explaining the story a bit more. We are definitely going to stay up here and watch for your your upcoming financials and continue to cheer you on in terms of the growth.
Yeah, I appreciate that. Thank you.
All right. Thanks, Daren. Have a great day.
Cheers, you too.